We've seen oil prices spike on Monday, and in the last 24 hours, gas prices also rocketing higher. Qatar has halted LNG production after attacks on its own facilities. Carole, just given Qatar's role as one of the world's largest, most critical, most important LNG exporters, how disruptive could this become for global gas markets, and what should we be watching out for next?
What happened with Qatar actually was a shock to the system because we all tend to focus on oil trade, but we forget that actually LNG trade has overtaken pipeline trade when it comes to natural gas. And that by itself comes with all sorts of risk, including volatility and exposure to such the incidents that we are seeing currently in the Middle East. And you're absolutely right that Qatar is a very, very important player. But it also tells us about something we tend to forget with gas markets, is how concentrated LNG supplies are. I mean, imagine you're talking about the U.S. and Qatar, but also if you bring in Australia, those three LNG exporters account for more than 60% of global LNG supply. So anything that happens in one of those players, let alone a country like Qatar, which has always been known for being a secure supplier, a reliable supplier. So anything that happens like what we saw yesterday, that has sent shockwaves across the global LNG trade. And let's see how long it's going to, the situation is going to remain as it is. But definitely it's not a pleasant scenario for gas buyers, and that is going to filter through electricity prices and all sorts of things across the world. If the situation is resolved within a matter of days or maybe a couple of weeks, then maybe that shockwave is going to pass easily. But if it lasts longer than that, then it's quite problematic because we're not sure how quickly LNG from Qatar can be substituted.
Or how quickly we can bring Qatar Energy back online as well, which is also a key risk for the market right now. At the same time, it's not just the attack in Qatar, it's also this very significant incident in Saudi Arabia as well. Some analysts have said the strike on Ras Tanura was a warning from the Iranians, demonstrating their capability to hit Gulf infrastructure. And of course, we've seen that being reflected in Qatar, as I just mentioned. So when it comes to what happens next year, Carole, how much spare capacity does OPEC have right now if the market suddenly loses significant supply from the Gulf and we see perhaps other Gulf infrastructure assets being hit?
That is the main worry today. Of course, the Strait of Hormuz is an important aspect that we are contemplating. But the other important risk is the attacks on energy infrastructure in the region. It takes one attack to send panic across the market for the time being. But also, I think for the longer term, the main worries is that if more of these energy infrastructure is attacked, then that might drag the players in the region, the countries in the region, into the war to protect their assets and perhaps to retaliate. That also a further worsening of the situation. Now, you asked me about OPEC Plus or OPEC spare capacity. That is largely concentrated in three countries, Saudi Arabia, Kuwait, and the UAE. And the big question is, if the current situation continues, how fast are they going to bring that spare capacity to the market and how they are going to bring it to the market? So that raises a big question mark on how easy it is to bring those additional barrels to the market when needed. But I'm not that worried at this stage because we do have more supplies from outside the region, let's say from the U.S., from the non-OPEC Plus suppliers. And also don't forget, Dan, there is a strategic petroleum reserves that have not been activated yet, that the IEA members are sitting on. So we're not in an Armageddon scenario yet, but I used to put a great emphasis on the spare capacity of OPEC, but that is concentrated in the Middle East players, in the GCC countries, which are at the moment under not a pleasant scenario with limited options available for them to get that to the market if the market needs it.
And of course, going back to our earlier discussion, you really do get the sense that the Iranians are using energy as a weapon here against the United States because, of course, any prolonged spike in oil or gas prices could have an inflationary impact in the United States. That's not what President Trump wants as he comes into the midterm elections. And of course, overnight, we also heard from Secretary Rubio as well, saying the U.S. can take action to mitigate an oil price spike as well, perhaps conceding that we have seen oil prices run up and that's going to have an impact on the hip pockets of average everyday Americans. Beyond that, people around the world as well. So what options does the United States actually have if we do see oil prices staying higher for longer?
Well, actually, at the moment for the U.S. is not too bad because it will benefit its shale industry. Remember, not long ago, some shale producers were complaining that prices were not high enough and investment is not taking place. And also, even OPEC, within its publications, they were warning of investment gap, etc. So higher prices might actually be, at the moment, at this level, might be acceptable for the U.S. because it provides a boost to its oil domestic industry. At the same time, yes, if prices continue to go higher and higher, that would spell trouble for Mr. Trump ahead of the presidential midterm elections in the autumn. But this is perhaps why he chose this time of the year to initiate the attacks, hoping that by the time the midterm elections happen, prices would go back to lower levels, and that tensions is going to escalate. Because we have seen with the U.S. over the last few years, if the U.S. was going to take any important drastic action that could cause some disruptions in energy markets and beyond, they tend to do it at the beginning of the year and not near the midterm elections, hopefully hoping that markets will correct by then.